In this video, guys, we're going to talk about the 5 trading mistakes every retail traders make and how I was able to overcome these mistakes, guys. So this is a simple sheet that can save your trading account and also, fast track your profitability in this trading space. All right, so if you like this kind of content and if you want to learn more of this, don't forget to subscribe and like this video. All right, so the first mistakes that every traders make when it comes to trading is trading without a plan. Okay, so this is a mistake that actually held me captive for many years. All right, so like Benjamin Franklin popularly said that if you fail to plan, you're actually planning to fail. All right, so but for us to be profitable in trading, we need to use a more of a structural kind of daily plan that include entry, exit, and reward base. So let me show you kind of a plan that I use, and every day I come into the market, this is what I look at for. If I didn't say this, that means the trading opportunity for me there is not visible. All right, so I'm going to show you some of the trade I've taken and based on the plan that I have defined for myself. All right, so the first thing that you need to know that personally I trade using wave analysis, and this wave concept explains something that is very unique, that every market will first of all make an impulse, and after this impulse the market will make a correction and drop the next impulse. Okay, so and also it makes another correction and drop the next impulse. So this actually continues until finally the market will reverse, okay, and start making another correction to keep pushing high. All right, so the first thing I look at for anytime I come to any market that I want to trade is to look out for an impulse, watch out for a correction, and then trade the next impulse. All right, you look out for an impulse, watch out for a correction, and trade the next impulse. So this is my trading plan. So I don't need to overthink this process. So all I do anytime, any day is to look out for this thing everywhere. That if I can't see that clearly, I will not be able to trade that market at that particular time frame. So that's what I do. So this is a Bitcoin chart, guys, as you can see, and I'll show you some of the trade that I've taken. Okay, some of the trade I've taken that actually aligns with this concept. So the first thing that we look at for is an impulse. It's an impulse. So I can remember I saw this impulse played out. So and it has broken this kind of mono wave, and I saw this corrective move played out. And at 618, I took a sell at this point, and I was expecting the sell to drop, so this to break this low. And when the markets came here, now I put my entry at break even. So and I saw the markets keep pushing high again, and you see that's the fractional nature of the market. Remember, I took a sell here, and I was expecting to break this low, and the market came here, breaking this low. So and I was okay, since the market has broken this, if I should get a retracement to 618 again, I'll be taking another sell here, and my stop loss is here. Remember, so once the market gave me this break of structure here, so I reduce my stop loss from this point and I drop it to this point. Okay, so and I took another sell here and I'm expecting the whole market to break. So then the market drop and push high again. For a lot of traders that doesn't have a plan, they'll be panicking because now the second trade is already on drawdown. But eventually what happened? The market came to smash what? The TP. Okay, you can see that the plan actually counts. All because I've already defined my trading plan before coming to the market, and that was why I held the whole trade to this TP. And currently now I'm already on sell on BTC. And why I'm on sell on BTC, you can see what the market has given us. So here we have this sell that is playing out, guys. Okay, and this sell was as a result of what? The market gave us what? An impulse down that break this structure, and it gave us a three-way move up here, and I took a sell here, and this is my stop loss. I'm expecting the market to at least to touch this low, and you can see where the market is currently. So because this is my trading plan, and that is why I enter this trade, and that is why I'm waiting until the market gives proof otherwise. Okay, otherwise means at least start breaking this high or start breaking this high. That's when I will be wrong. But if not, I'll still be in this trade until my TP is smashed. So at the end, it is the plan that counts. For some that don't have plan, they will see them, oh, it's going down, they'll be happy. It's going up, they jump out. It's going down again, let's hop in again. It's going up, they jump out. And at the end, you mess up your psychology and you will not be profitable. So the first, as we have said, is for you to have what? Make out a plan if you don't want to lose your hard-earned money. So discipline starts before you trade, okay? So the second mistake is over-leveraging small accounts. Over-leveraging small accounts. You know, you should understand that this is a long-term haul, guys, okay? So leverage is a double-edged sword that you need to handle it with care. So if you take too much risk on a small account, for every slight pullback, you know, that might take you out or, you know, even liquidate your account or you get a matching call. Imagine whereby you are risking everything and your plan is to like double your account and the market comes down in your favor and you're like, okay, very good, let me wait. Maybe you start adding more. By this retracement, you'll be wiped off. So that's just it. So you need to define your risk. So risk not more than 1 to 2% on any account per trade. Risk no more than 1 to 2% on any account per trade, because consistency beats big wins. Okay, so if you want to be in this trade for long, you need to plan to be consistent in your risk management. Now there are two sides of risk management, because I've seen that a lot of traders gravitate towards the flipping of accounts. Okay, so if that's what you are interested in, then you need to learn how to manage your accounts proper. So what I would recommend is this: if you want to be flipping accounts often, then assuming you have like $100 here, you have $100, you want to flip this $100 account, and that is how much the whole money you have. Then you can divide this money into like 4. Okay, you divide this $100 into like 4, like $25 per one. Then fund one account with $25. Try to flip that. Okay, if you flip that $25, then that means you have regained your capital back. Then you withdraw that $25. Then the remaining $25, then you can go hard or go home. All right, so you can now decide to go hard on the remaining $25. Then eventually, if you pass that challenge, very good. But if you lost the challenge, you repeat the process again. But don't ever use your whole capital. Don't ever risk your whole capital, that are assuming that you're trying to flip the whole thing, because that will be 1 step forward, 3 steps backward, okay, and which you will not like. So, but for professional traders that gravitate towards trading prop firm and other big capitals, risk 1 to 2% per trade, because that is the way to build consistency in this industry. All right, so the third mistake is cutting winners and letting losers run. Paul Jones said that losers average loss losers and winners ride trend. So you should understand that okay, anytime you are trading, you should define your loss before you enter the trade. Okay, like for instance, this current trade that is running now, if eventually the trade comes to this point, it will take me out. Whether I'm on the screen or not, it will take me out. And eventually, if it comes here, which I know definitely, then I'm already in profit. So I've already defined that this is a trade that averages 1:2 or 1:3. This is already 1:2.4. Okay, so that means whatever I'm risking, I'm planning to gain more. Okay, so I'm averaging that. Okay, that's a game of probability. By the time you are taking like 20-40 trade, you already come out of 50% or 60% profit, okay, from all your trade to get collectively, okay, because you don't bank on one trade. On average trade, you take your profit or your loss at the end of 1 month, at the end of 1 week, and at the end of, depends on how many days you want to be trading before you take measure in your trade. Because there are majorly 5 outcomes here: big losses, big wins, small losses, small win, and break even. So you need to cut off that big losses, and you'll be happy that your account equity will be growing up. All right, so the fourth mistake is chasing signals and influencers. No doubt some guys have made it big in the trading industry, and a lot of newbies, a lot of beginners just chase them, like taking their signals and not knowing that, okay, these guys have very big accounts. Even some fake guys there are using fake accounts, and before you jump in taking anybody's signals, try their signals using the demo account, and also calculate the losses whenever the market goes against you, because market rewards independent of thought. We are here for a long haul, not just a quick wins here and there. Okay, so in the next 1 year, if you want to be a trader, you should be thinking, in the next 1 year, this is where I want to be. In the next 2 years, this is what I want to be. And that's why you need to like make an informed decision. Try to backtest your chart. Like I trade BTC and I trade gold on a daily basis because I've known these pairs, what they can do. And I know that every market out there, especially these pairs, they follow market structure, more especially the wave patterns. Okay, so at any time you see an impulse, you wait for a correction, you take the next impulse. This is how the market has been, and I can show you more and more of this pattern here and there. We have an impulse here, we have a correction, we take this impulse, we took this trade, we have an impulse, we have a correction, and remember we took this trade, you know, we have an impulse, we have a correction, we're already on this trade and waiting for it to drop. Okay, we have an impulse, we have a correction. I can show you all and all on how this thing plays out, and that is why you need to know with confidence that this is actually what I'm expecting, and based on this I'm taking action. So you need to trust your analysis, study wave structure and market behavior, not social media. Okay, trust your analysis, guys. Be confident in taking that. You know, there are two outcomes here. You wins or you learn a lesson. Okay, you win or you learn a lesson. That is just two outcomes. So if you can gather all the lessons you have learned so far, are you able to like, why did I take this? Why did I take this? And at the end, you find out that you'll be more right than wrong because you are not making more informed decisions. The last but not the least here is no trading journal. Okay, so what gets measured gets improved by Peter Drucker. All right, that's what he said, and this is very, very true in trading, because this trading, guys, is a action-based business, performance-based business, and because the performance-based business, you just need to like prove to yourself that you're able to follow a certain route, just like a pilot. You know, no matter the assumption, no matter how you feel, you must do some certain checks before you fly a plane. Okay, so without doing those checks, you know, you will not be able to take, and if eventually anything goes wrong, you know, you have yourself to blame, and in fact, they can even seize your license because you are careless. Because most traders, nobody manages them, nobody queries them when they get things wrong. That's why you keep making one mistake over and over again. Now, if you want to improve the way you behave as a trader, you must have a trading journal. Okay, so track your trade, record why you entered a certain trade, and also why it plays out, and take measuring action on it. Okay, and tell yourself that you'll not be able to repeat that mistake over again. And if you can, every week, let me just say, 1 week you are correcting one mistake, 1 week you are correcting one mistake, 1 week you are trying to correct one mistake. By the time you have traded for like 1 year, you find that all your errors will be minimized and your strength will be enhanced, all because you're able to journal your trade. Now, finally, you need to master the market by mastering yourself. It boils down to who you are. You know, we can see the same chart, but we trade our perception. You know, and it's boiled down to the paradigm. You know, the paradigm defines the way you understand things, the way you believe that things is. You know, look at this market today. This is BTC. A lot of guys have been smashed today. There's a lot of traders that have hopped in as they buy, and some have hopped in a sell, and most of them have lost money, all because they were like trying to catch the big just short wins. But you know, I'm still holding myself because I believe that this market is going to drop. So you need to tell yourself, have the right perception of the market. Tell yourself that this is a long-term business. Tell yourself that I'm not here to make money fast. Okay, because once you start telling yourself the reality, you know, you start conditioning your mind to take the right action, and that will help you along the line in becoming that trader that you desire to be. All right, so that is just what you need to tell yourself, and for you to be profitable and overcome these mistakes that is killing a lot of retail traders. All right, so discipline is choosing between what you want now and what you want most. Now, in case you don't have it in your mind, I want that you that is watching this video to this point, become a profitable trader. Okay, I want that you become an independent profitable trader. I want that you be able to print money, that anytime you look at the market, you're able to know what exactly you're looking for, and based on that, you take an action. Now, if you have gained value from this video, guys, don't forget to smash that subscribe button, don't forget to like this video, and don't forget to follow for more. Finally, I'm documenting some of my trade using on Telegram group. In case you've not joined our Telegram group, you will see the link below this video. Kindly join for more updates. Thank you for your time. See you in the next episode.